This episode is brought to you by Koifin. Koifin is one of the fastest growing platforms for financial data and analytics to research stocks and understand market trends. Imagine a Bloomberg Lite with tons of high quality equity and macro data, a powerful graph engine that can show it all clearly, and a user interface that doesn't look like it was built in the 1990s. If you're an individual investor, research analyst, portfolio manager, or financial advisor, do yourself a favor and check them out. You won't regret it. Sign up for free at koifin.com. That's KOYFIN.com.
Hit it.
It's Friday, November 19th, 2021, episode 157. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome to the show legendary Bay Street trader, rock and roll promoter, and just one of the nicest guys out there, Mike Wekerle. Tune in to hear his story of the 1987 crash, how they stumbled upon one of the greatest nickel discoveries in all of history from a helicopter, and what life is like now owning the idyllic Mocambo. And then our resident crayon chewer, Patrick Ceresna, spits out a few chart updates for us.
And this week in trading history, we discuss the invention of the stock ticker. We end with the segments of No Stupid Questions and Skin in the Game. And well, folks, we might even drink some beers along the way. So stick around. We got a great show. Lena, hop on. What beer are we drinking this week?
So this week, I believe this is the last of our Hungarian beer series.
Yeah.
We are drinking...
You make it sound so official.
Because I'm about to butcher the name of it. I'm a little...
Oh, here we go.
Kobanya beer from Hungary.
Mm.
So the light beer of Kobanya is characterized by a clean, barely perceptible aroma of hops and malt. The taste is soft, light, slightly bitter, and pleasantly carbonated. In addition to domestic beer drinkers, a jury of the famous beer qualifying competition Malt Selection, based in Brussels, also recognized its quality several times. In 2014, it was awarded a gold medal for the sixth time. Kobanya is one of the best-selling beers in Hungary.
I like it. I'm a buyer. This must be their little Labatt's Blue of Hungary.
Yeah, it's a really nice, clean tasting beer. I like it. I like it. Anyway, Lena, we also want to give an update on the merch store. How's it going?
Yes, so we had several requests about Lord of Crayons graphic. So it is coming. It will be updated this week. There will be a Lord of Crayons merch.
Oh my God, I got to see this. I'm gonna be the first to buy one, I hope.
So stay tuned. We will announce it on Twitter, and you can visit markethuddlemerch.com.
There's a couple other ones coming too. We're going to keep new merch coming, so keep an eye out on it.
That's right. It's a great gift for your drunk uncle in the corner for the holidays.
All right.
Okay.
Kev, give us the side effects. Yeah.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include perpetual printing press dystopia, the mad macro mumble rumbles. Pretty sure that homeless guy down there with either was short S&Ps forever that he's got that. And then the gruesome gold gaps.
Oh, wow. There you go. I like it. Okay, let's get to our interview with Mike.
It's our great pleasure to welcome to the show Bay Street trading legend, Mike Wekerle.
Hello. How you doing there, Kevin? Great to be on your show.
Mike, I've been looking forward to this for a long, long time, and I usually let my guests talk. And I feel like the job of an interviewer is to stay out of the way and just ask questions. But I'm going to start this interview a little differently. And I want to tell you a story about when I was a younger fellow. And when I had actually just got back from the pits in Chicago. And I was looking for a job in Toronto. And I wanted to be on the institutional equity desk. So what I did was my old man said, figure out all the head traders on Bay Street and write a letter. And then what you're going to do is you're going to phone them up and you're going to ask them for a job. So I looked through, I figured out the the 4 banks I wanted to work for. And then I wanted to work for Gordon Capital or First Marathon. So I send them off. And then a couple of weeks later, I phone up my first trader and I choose Gordon Capital because they were the bee's knees. I really wanted to work there. And I get this guy, Howie, and I say, hi, can I speak to Howie? Howie comes on the line, and I say, hi, it's Kevin Muir. I'm looking for a job. And he says, what? Who are you? And then he basically tells me, he says, fuck off, kid. And he hangs up on my face.
Howie Ralph.
And so
Sounds
I
like
sit
him.
there. Yeah, and so I'm like a 20-year-old kid. I'm literally one step away from tears. I think, oh my God, this is way tougher than I ever imagined. And I stop. My dad comes home and he says, how did it go? And I said, well, it didn't go very well. And I tell him the story about Howie. And he says, well, how did your next call go? And I said, what do you mean the next call? I said, like the reality is that they don't want to hear from me. He says, listen, get on the phone tomorrow and make the next call. So the next day I got up and I phoned First Marathon, and I'd never heard of this guy called Mike Wekerle. And I got you on the phone, and you were the very opposite of Howie. You were nice, you were kind, you took the time to talk to me, and we've never actually met, even though we traded across from each other at different firms for a long time in the 90s. I just wanted to take this opportunity to say thank you, because ultimately you enabled me to have the confidence to call my next firm that I wanted to work for, which was RBC Dominion Securities, where I got my job. So I just want to say,
well, congratulations. No, that's great. Thank you very much.
You were the nicest guy. You took the time. I was a nobody. I've always said the most wonderful things about you and say that I owe you a lot because of that time you took. And so thank you from the bottom of my heart.
Well, Kevin, thank you very much. And I do remember trading with you back in the day. And was your father in the business?
My father was actually the research director at Richardson Greenshields. So I'm actually a Winnipegger that moved here in the 80s.
Wow, that's a lot of success stories come out of Winnipeg. Jimmy Conacher from Gordon Capital was a Winnipeg boy.
That's
so,
right.
And the Richardson family, of course. So you're in the alumni with a lot of greatness there, Kevin.
Yeah, Jerry Schwartz is from Winnipeg, and Bruce Flatt from Brookfield is a Winnipegger as well.
Oh, geez. Yeah, that sounds excellent. Well, I'll tell you, you know what? It was a tough business in the 90s. When I started, it was the early 80s. It was a difficult place to start off. I started off the floor of the Toronto Stock Exchange. I was running orders, and I worked for a little firm called Jeffrey and Leclerc. And it was the 83 recession was hitting on. They just moved to the new floor, and I got let go. It was that same thing, last in, first out. So myself and Steve Smith, who's gone on to be very successful, were let go. He was a trader. I was a phone clerk. And I went every day for 30 days, because in those days you could keep your badge and go back on the floor. And I sat there until a very excellent man who became my mentor, Alec Miller, who we knew as Barney Miller at First Marathon, hired me. And the rest is history. But he was a great lesson. But very similar to your story, my first crack at this, was a disaster. I felt like going home with my tail between my legs. Will I ever make it back in here? And it was just going every single day. And, I wouldn't say they were the kindest individuals in those days. They were type A personalities. And yeah, as I know, Kevin, you took a lot of guts to go back on that phone and try again.
Yeah. So for those who don't know, Mike is being very humble here, but he was the block trader of the 90s. He was our nemesis. I was at RBC Dominion Securities, and we would be working on blocks and trying to put them up. And then all of a sudden, out of the blue, we'd be like, God damn it, Mike, put it up again. And he would be stealing trades from us. I would love to hear the story of how you went from being that phone clerk to the kind of the guy when it came to Bay Street in terms of placing those blocks and trading it.
I tell people, the only time success becomes before work is in the dictionary. It was a lot of hard work to be successful. And when I started in the business, I learned really quickly that it was a very cliquey business, and you had to understand the rules of engagement. So doing your CFE course, doing your CFI course, doing your options course, futures course, I did them all immediately. Fortunately, I was 18, 19 years old, and I was in a position where I was still in the game of, studying and doing courses. So that worked out well for me. But the one thing I realized, which was the success of getting great mentors. So, you have to be good to be lucky and lucky to be good, they say. But hard work and having good people like the likes of a Mike Gardner, who I still am very good friends with today, Alec Miller, who passed away. Barney Miller was one of the most legendary traders on the floor. Everyone knew him. He was synonymous. And his thing was a no-nonsense attitude. You came in, you worked hard, you were never late. And if you're ever, you're 5 minutes before everything that happened. So he always was, very strong on integrity and discipline. And that carried through for my career. what was really key for me is understanding the world. It's like any game, whether you're playing chess or football or hockey, you have to know the rules. There's a reason why Bill Belichick wins all the games and has been an incredible coach for the Patriots for so many years, because he knows the rules inside and out. And if you know the rules, then you can skate on the outside of the fringe of the fairway. You can play down the middle of the fairway, which oftentimes is very crowded, or you could be on the fringe of the fairway, but make sure you know the answers. Make sure you know the rules of what you can and can't do. The 90s saw a transformation from what I would say block trading that was done very much upstairs over lunches, etc., to roll your sleeves up. No one's leaving for lunch. I know, Kevin, you were probably in the same boat with me, where the guys on the desk, and Paul Hand was probably running the desk like an Army general. Good guy, know Paul well, but It was tough. You didn't get a chance to go for lunch. You worked from 5:30 or 6:30 in the morning with morning meetings right till 5:30, and it was a game. It was a pressure cooker, and to be in that pressure cooker, you had to have a good team. So my success was building a strong team around me. And they're from different areas of the world. We had people that were competitive hockey players. We had PhDs from MIT. And we had a host of different people, both male and female. I think some of our strongest traders were Sidney Trippett and Nelson, who were on the desk and worked with me for various firms, both from First Marathon and then continuing on at GMP. So having a good balance of people and creating a good team really made me the success. Unfortunately for the other traders, I took all the credit.
Now, did you find that trading came naturally to you? Because you were at kind of the forefront of trading blocks and trading what's known as proprietary, meaning taking positions and dealing with risk. Was that something that came naturally, or was that a function of learning and getting passed down from these mentors that you're talking about?
Well, it was a bit of both. I started off in my early life as a busboy when I was 12 or 13 years old. Before that, I had a paper route. And with a paper route at the Toronto Star, you had those little tickets back in the day. And you had to think very quickly for the people that would pay you on time, because I'm only, 8 years old. I can't bankroll my paper route. So half the time they don't open the door. When they do open the door, they're having dinner. They don't want to talk to you. They definitely don't want to pay you. So you have to hand the ticket, and they give you $1, and you got to figure out that change of 37 cents or whatever it may be very quickly, and you got to have it ready. So I had to train myself to make sure that just to stay afloat in this, 4-block business I had going on, that I had to think fast in numbers. So it became very easy over time as I grew older to stay with numbers and stay with the business. What the stock market did for me was getting engaged into it and getting engaged with different people. I find in any business, for you to take an interest in becoming a success, you have to do the work, but also you have to have a passion or a liking for it. So I started investing pretty well day one when I first came into the business. And I can't say I made any money. My return was probably negative 90% in my first year of investing, like most people that go to the casino. But practice makes perfect, and you start learning how to invest versus trade versus, gamble. And, all of which have a validity. Sometimes you're lucky gambling. Some people are good at it. I wasn't, but I was good at trading, and I was good at investing. And where you have, the trend is your friend, there's certain things that will continue to go on. Being patient and being quick to make decisions is always the key thing of being a great trader. And then what would go over and above that is a firm with a bunch of great research and analysts, so you actually have the knowledge base to make the decisions that give you the ammunition to say yes or no to a block. But like I said, it was a tough business because from the start, they expect you to lose money. If you lose on a value of your commission, so let's say you do $10 million of commissions, you're expected as a liability trader to lose $2 million, but no, not more, because your commissions offset that. Because your big business in corporate finance fees, which is 5% or higher. That being said, one of the key things I had, I was able to have a long-term average of 10%, which I guess in a batting order would have got me up around 300 or 400 as a baseball player.
Yeah. Now, Mike, one of the things that I've heard attributed to you is you would always say, I'm going to put a position on the sheets, or I'm going to put that spread on the sheets so that I would be forced to watch it. Is that true?
Correct.
Is that what?
100%
Why don't you tell
true.
us? Why don't you tell us a little bit about the philosophy behind that?
Well, it's like a stock watch. If you're invested, and there was a guy that was called One Share Charlie, and One Share Charlie would own one share or two shares of every company you could imagine. So anytime you went to an annual meeting, you'd see this guy there, and I thought he was just there eating sandwiches for a free lunch. But I got a chance to meet the guy, and I sat there, and he was an old guy. At the time, I would have been in my 20s. He would have been in his 60s. So he's long gone now. I'm 58. And he would say, I'm coming here because I can ask any question like any other shareholder because I'm a shareholder. One share, Charlie was a shareholder. He didn't have to own 100,000 or a million shares. He had his one share. He can ask any question in the annual meeting, get an answer. He can talk to anybody within the company. And he did his homework. And he had the best knowledge of every company he had. And if he had 100 shares of a company, he was all in. So Charlie never really had a lot of money in the market, but he was, I would call, was a really rich man because he was content with what he had. And he was full of notes and charts and everything, but he taught me a lot as far as how to set the basics of what you do. If you own and invest in something, you're much more capable and you're much more apt to watch it and then read about it in the newspaper, look up in Bloomberg, and as you would do now, or go Google some of the information. So if you don't own it, you just kind of see it go past, and it becomes very passive. And you talk to your friends, you kind of say, oh, that's cool. That's a good technology. Oh, I like Uber, or yeah, Tesla sounds like a good idea. Had you bought Tesla day one, you've been a lot more involved. You would have a lot more interest in it. And you probably, at this point in time, would be driving a Tesla with the profits you made on the stock.
Right. One of the things that I knew you best as is the fellow who was involved with Friedland and Voisey Bay discovery, which for those who don't know was a big discovery here in Canada. Was it Newfoundland? If I got it right, Newfoundland?
Yeah, it was. Yeah, it was a big discovery, Voisey Bay, just off the coast of Newfoundland. And it was a funny story because.
Oh, sorry. Go ahead. What I was going to ask, though, and I'll just let you tell it with this question in mind. One of the things that I always find fascinating is Friedland. Friedland is, for those who don't know, was a fellow that actually roomed with Steve Jobs, and he was one of the greatest salesmen of all time.
For sure.
And I think he's been eclipsed by Elon Musk, but that's probably another story. I would love to hear your experience dealing with Friedland on this discovery and kind of walk us through this period of your life.
Well, I'll tell you, Robert Friedland is an incredible man. He's, when people have one discovery in their life, that's almost 1 in a billion. He's had 2, Oyotogu and Voisey Bay, and some people would say that he's actually had 3 in some of the smaller ones he's had, but he's actually made a difference in corporate Canada in some of the investments. And funny enough, when he was there looking for this big nickel discovery, he wasn't looking for nickel. He was looking for diamonds.
Oh, okay.
So we funded at First Marathon Diamond Fields, as it was known, and it was an alluvial diamond company off the coast of Namibia. So they would have like a big vacuum cleaner going to the bottom of the ocean and trying to find diamonds. It really was unsuccessful. John Boole, who was famed in the diamond world, was convinced that he would find diamonds off the coast of Newfoundland. He had done a lot of work on the geology of it, on the timing and the age of the rock. And as they flew over, they saw this shiny, shiny spot in their helicopter. And they flew down and they staked that land because they didn't know, but what they did know, that the grade of this nickel from being visible from up in the air. Now, I don't know how many people from the province of Newfoundland would have done the same thing and not seen it. Here comes someone out of the blue, never spends any time in Newfoundland, and finds this big discovery where he then contacts the owner of the property, Chris Verbisky, and Chris Verbisky and him do a deal, and the rest is history. So the reason why I was so involved in that is that it was a very failed deal at first. The company went public. It went down 50%, between all the accounts that I put into it, the firm, myself. We had so many shares, I couldn't go anywhere without shares falling out of my pocket. We had bought every single share that came at us. And it was one of these deals that, you're the only bid and you just keep going back and you can't take it anymore. One day we woke up, the stock went from $2 to $6, from $6 to $12. And I was fortunate enough at that time to have quite a bit of shares for myself and the firm. And the firm then, because of our stance that we took in the tough times with Robert Freeland, when no one wanted to talk about the diamond field because it was a failed alluvial diamond company, he had the respect and the friendship to stay with the firm and the loyalty to stay with the firm. And we did all their financing, including selling the company. As you see later in life, when companies get bigger and bigger, more people get attached to it, and it's hard as a boutique firm to stay there. Working at RBC is the biggest firm in Canada, and you see how strong that power of that brand is. Right. Gordon Capital is not around, but Gordon Capital was a very formidable competitor, but the assets go up and down the elevator. It's different from an asset business, very similar to GMP or First Marathon, et cetera, because as those assets age and they go up and down the elevator, it's hard to replace that dynamic kind of magic. And you can see it with hockey teams sometimes, like the Oilers of the days or the Montreal Canadiens, when they have those dynasties. But I would say that, in the brokerage firms, the right thing to do is build a platform where you have longevity, and that's what the banks have done, and that's why they're so successful.
Well, that's a fascinating story. Now, you've experienced, two major crises? I guess there was long-term capital, the 98 crisis, and then also the
I was there. I was my first time on the desk, Kevin. I just went to the desk, and so I started it would have been late 81, 82, 83, 84 on the floor. So I would have went to the office in 85, getting my feet wet, really making strides in 86, and I got promoted in the summer of 87.
Oh, so you've seen three. You've seen all three of them.
I got my own accounts in the summer of 87. It would have been early summer. And the market was on fire. You have to go back March, April, May of 87. It was a crazy fast market. The CPI was going high. Inflation was rampant. Gold prices were going crazy. And I was coining it. I had accounts because my account coverage, funny enough, is that no one wanted to go to overseas for a day and fly back. I was in my early 20s. I said, you're going to give me a credit card. I can fly to London, England, first class. I can stay in a hotel and come back the next day. I'm all in. I'll take that in a second. So no one wanted to do it. I loved it. For me, it was the best thing in life. I was single. I had everything behind me. I'm making good money. And now I got a American Express at that time was a silver card. And I thought I was the king. And the other area they gave me, because, again, it was not much action there, was the East Coast of Canada. So I became close friends with the Steele family, the Dobbins, and a few of the Sobeys, et cetera, the guys from a bunch of different corporations. There's really 5 or 6 families out there.
Right.
And it gave me the ability to go and spend a lot of time on the East Coast, which I love the people there. They're just great,
wonderful.
Great people.
Oh, yes, completely agree.
And they're salt of the earth. So that was my coverage area. My coverage area was parts of the U.S. It was Europe, which includes Rotterdam and England, and then it included some of the U.S. gold funds. And I worked closely with our analyst, John Lytle, who was a brilliant analyst, but also a great trader. Probably, as an analyst, the best trader I've ever seen trade the market. He just knew how stocks would turn, primarily in the metals market. We used to come up with things like think zinc. I said, why are you saying that? She said, think zinc. It's going to go higher. Sure enough, it did. He called most of the metal market runs. And he's just an incredible guy, John Lytle.
So why don't you tell us what it was like being, I guess at this age, your late 20s, and 1987 comes and you have your own account and it's your first major crisis or your first major crash. What was that like?
Well, it's a crazy story. Almost unbelievable, I think, right now. I was 24 in 1987. Now, my birthday's in December, so I was 23 at the time. I was born in 63. I was making good money, and I probably had about, in all my accounts, personal wealth of close to $1 million.
Oh, that's a lot for those $1987.
Oh, yeah.
Yeah.
But coming from a kid that had nothing, it was a difficult challenge to make it. That was, that was 6 years of pivoting, going back and forth, and maybe it was like $700,000. I can't remember the exact number, but it was a substantial number for me and for anyone at that time. The crash came, and those days, settlement was 5 days. So it was all on paper blogs, and you had to go back and forth. So what had happened is that when you settled a trade, you had a week, because it was 5 business days plus a weekend to settle the trade. If you didn't settle, it was not the end of the world. You could settle in, 10 days and clearing would have it, but they'd physically walk certificates back and forth from brokerage firms. So when the crash hit, it was such pandemonium. I lost everything the first day. The second day, it went down lower. So Black Friday, I lost pretty well everything. The crash on Monday, I was negative $2 million.
Come on.
I go home. I go home to my mom. Now, you got to remember, my mom's a school teacher making $40,000 a year. My dad's an import-export making very much money. I don't have any family trucks. I've got nothing. So I got to go back. I go, what do I do? I don't have to settle this trade for another 3-4 days. I talk to my mother and I say, I don't know what I'm going to do. She goes, well, you know what? We'll sell the house. We'll do what we have to do. We'll figure it out. Don't worry. Your health is more important. So I got on my horse and went back. I got in the office that next day at 6 o'clock in the morning, which was early because the market didn't open till 10. And I said, I'm going to start trading. So, again, there was no margin calls at that time because no one could keep up with what the margin was. No one knew.
Right.
Like there were so many people under margin at the time. No one had a clue. And in the next 3 days, I made $4.5 million. So
that's awesome.
So it was maybe 5 days. So I traded my ass off, and I would run back from the office to the floor because when I was on the floor when the stock was too oversaddled, I wanted to trade down there. So I'd go back, put my trading jacket, which I could in those days, and I would spend 2 hours on the floor trading, run back to the office and call clients. And so I made about $4.5 million, taking a negative $2 million to plus 2.5. And I probably gave back, a little bit of that money in the coming days. But I ended up really making my head start. And I think that I can't remember the exact number. It was just over $2 million at the end of that whole crash. And I decided at that point to start an RSP and not to go through that stress that I had. So I tell you, that was a lot of stress going through that 5 days. It was kind of like, my next job, what would you like with that? Would you like fries with that?
Mike, that is the greatest story ever. And so now how did this
a crazy story.
How did this compare to 98 and then the great financial crisis?
No, nothing compared to that. Nothing, because again, that was all or none. That was a knockout punch. And, if I didn't, and I was tempted not to show back. I was tempted to go high. I was tempted. And my mom said, you got to have the courage to go back in, tell them what's going on. Whatever we have to do, we have to do. But, don't run and hide. Face the music. And I said, okay, I'm going in. And I said, well, everyone's in the same boat. I went to the office, and everyone is in the same boat. Every major account's calling, and they're putting orders, and they don't know what their money, they don't know what their statements are. No one knew. No one had any clue. It was so upside down at that time. So I said, here, let's give it a shot. And the volatility was so high. And that once you start making it back, it's almost like an addiction. You don't want to leave. I didn't want the market to close. I would just sit there, and I the next day I think I got in at 4:30 in the morning, just waiting. It was like this game. I'm just waiting for it to start. And I would read up and look at all the historical trading on these stocks. I know exactly which ones I owned or which ones I wanted to trade. I had all my clients I talked to that night. I was really working hard in those days. My clients made a lot of money. I made a lot of money. And in those days, there was the ability to do that. The world always changes. The one thing in life is that rules change, and what would have been legal 20 years ago is not today.
Right.
In a whole bunch of different industries. But it was hard. Long-term capital was painful, very painful. We were in the big of the tech business in the 99, 2000 level, so we were very well known for Descartes and BlackBerry and a lot of the big flyers there. That was a tough time because we had a lot of clients that made a lot of money. Some took money off the table, but a lot didn't. And if you go back in those days, you had BlackBerry trading at $280, Nortel trading at $120. Nortel went from $120 to zero, and faster than ever seen a stock do it. And this was Canada's largest telecom company.
Right.
Unbelievable. No one even heard of Nortel. Like Nortel was the equivalent of Bell. It was fun on Bell. If you would have said to me when I started that Northern Telecom would not be around, I would have called bullshit.
It just goes to show you that the one constant is change, and I completely agree.
That's right. That is so true. That's the only thing in life that you can depend on is change, and the only thing in life that you have control over is your decision.
Right. So let's fast forward here, and let's talk about what you're seeing today in the market. and whether you find we just went through some crises and some crashes and talked about the stress. Are you worried about a repeat of any of those events up here?
Yeah, well, I think that you have to look at how much money is in the market. There's a huge amount of liquidity. There was a lot of liquidity 3 years ago, but then coupled in the last 2 years of the pandemic with the amount of stimulus that has been put on a global basis, people are not concerned about inflation. I am. People are not concerned about, what the valuation metrics is. I am. It's like anything. If you have a finite amount of dollars in a poker game, the bets are relatively small. If you start giving people monopoly money and say, okay, you can bet, here's $1 million to bet with a monopoly money, they're going to bet a lot more money and lose a lot more money. So at some point in time, there will be winners and losers, but the valuation metrics on market caps today, on a price to earnings basis, I've never seen a forecast a company put forward that the company didn't like. So a lot of the forecasts get to be disappointing because of the unknown. And the unknown is the known. There's a reason why, companies that were in the home hardware business, whether it be Home Depot or any of the businesses like Costco or the food companies, did overly well because people stayed home. They ended up doing a lot of house renovations. They bought cars. They didn't travel. They did a lot of things. The stocks that have rebounded in the airline industry, I'm very wary of. I think people's habits will not change that quickly. I think there's a concern on the market. I like some areas of the market that are taking technology and making productivity higher. One area I like a lot, which I'm involved in, is the fintech area. If you look at all the different, stadiums, they're being named by SoFi, Crypto.com. There's a new age of digital currency and digital banking where the old bricks and mortars ATM cash business is going to be going away, and it'll go away quicker than people think. I do believe that the banks have insulated themselves, in Canada at least, from a lot of the downturn because they have other businesses that deflect from it. They're in insurance. They're in mortgages. They have a lot of different areas. But if you look at interest rates go from 1% to 3% and mortgages go from 3% to 5%, that's going to stress quite a few people in the mortgage market. I have fixed all my mortgages right now. Whether I pay $225 or $245, I don't really care. When I first got my first loan, when I bought my first Mazda GLC, I paid 14% interest. So that goes back to a long time ago, but it goes to show you what happened before it could happen again. And there's a direct inverse relationship between interest rates and housing prices. There's a relationship between when markets go into turmoil, people need to raise cash. One of the few areas that they can raise cash is in equity markets and in markets. The problem when people start losing money, people get concerned and margin becomes a concern because money is cheap. So people are overborrowing right now. There's a huge amount of leverage in private equity. There's tons of money. I don't see a day that doesn't go by where I don't see another $1 billion deal. I think Peloton raised $1 billion today or yesterday. And you're seeing this going out, and where they think that normalized money is $1 billion. I know when I was in the business, even in 2000, $100 million fundraise was huge.
Right
now, it's nothing. So I think there's too much liquidity in the system, and I'd be concerned. I'm negative on the market. I do like some areas. I like the green area of the market, and I don't look at electric vehicles as being green. I look at them as a business, and I think the business is okay, but way overvalued. So I'd avoid that area and the fad that's there. I like the environmental side of the business that takes organic waste and turns it into energy. I like the business of fintech, as I said, where you are now, any kid that's under the age of 30 doesn't even have a bank account they've known somebody at. Everything's done. They're transferring it through Apple Pay. Everything is being purchased online. I love the online sales business. Anything like an Amazon or associates with Amazon is going to be a growth business and will be for a long time. Logistics is a growth business. You see how much demand there is for logistics, whether it be truck drivers or ships. And that's a sign of this business is going to stay for a while. It's really expensive now. As competition increases and they get higher prices, there'll be more supply coming on, which will level out prices. And you always go through times of slowdowns, but I do like that area as well.
So, Mike, you mentioned kids. Have you ever seen the amount of speculation occurring in the markets that we see right now with the likes of AMC and GameStop?
Never seen it in my life. But, we've always had areas where there's been manipulation. This is just another form of manipulation. This is social media manipulation. And frankly, at the end of the day, someone's going to lose a lot of money. And there should be more regulation and stops when these things go up a certain percentage and make sure that the company has a release. But again, if hedge funds want to take a position and manipulate a stock on the downside, they should put back the trading rules that would avoid that. Right now, you can short sell a stock without any downtick. So you can sell a stock down to zero that might have good fundamentals. But if you have enough capital, enough people, you could corner that market, which I think is wrong. If you put some stabilizers on the short selling business, you wouldn't have the AMCs of the world do what they do because they couldn't drive a stock to zero. It used to be you had to sell a stock short on an uptick. Then It had to be on a side tick. Now you can sell it in any tick and move it down. I think if there's an uptick rule that comes back in the marketplace, I think that'd be a lot better for companies to raise capital. It'd be a lot harder to short stocks, and you wouldn't have that rampant rise where you see a short seller crying the blues because they lost $1 billion because they got squeezed. Well, you played the game. You went to play the game. It's justifiable for both parties. So when there's manipulation on both parts, I don't have any sympathy for either side other than saying you're playing the game. You're playing by the rules. You know the rules. You got to understand that.
Do you think that there's manipulation happening on the other way though now, on the upside? Because I look at AMC and GMC.
Oh, for sure. I think there's. I think. Well, when they look at what's going on here, I think that what you have to look at is the fact that you have to understand that the manipulation that's on the upside is based upon information that might or might not be true. So you see information that comes to you that says, hey, I hear that XYZ fund is short this many shares and this many shares, and they go by hearsay. Sometimes they're right, sometimes they're wrong, but it's manipulation based upon what I call market chatter, no different than insider trading when you get tipped to buy a stock. So I think that it's something that has to be addressed. I don't know how to address it myself, but I do think that there have to be preventive moves to stop it from happening. Because once it happens, you can speculate, Kevin, what I'm long or what I have just by the conversation I had. You can sit there and say, well, I'm going to manipulate these stocks because I think this guy's long this stock or he has this stock or whatever. And you can watch it. There might be a time, and that is going to be just based upon information. And with the amount of AI that's out there in technology, you can data grab a lot of information and kind of simulate what people's mindset's going to be. So I think the way it's going right now, you got to be very cautious. Fundamentals will always stand and take place. Right now, you're in a very manipulative market. And I think that's why when you have manipulation and you have a lot of money on the line, I'd be very cautious. I'm on the sidelines.
I remember in our day, Mike, we used to laugh and say that we're selling when the dentist finally figured out we're going to sell it, and it would be something right. We spread it across institutional desks, and then eventually you might go to the AOL board or whatever, and then finally on the third day the dentist would figure it out and you sell it to the dentist. Well, nowadays the dentists are on Twitter or Wall Street Bets or Reddit, and they're organizing raids with the rest of the apes on
There's
stocks.
No doubt, like the amount of information, like you look at all the online, you look at Robinhood, you look at TD, or you look at Schwab, and you look at, they're trading for free.
Yep.
They're getting more and more discounts to trade the business. They don't have advisors. Their advisors are all online. They have virtual advisors that gives them access to all the different tools that you would think that an analyst could use. But they don't have the training as an analyst. But they do see, and some are smart enough to understand that they can game the system. They see the way stocks trade. They see the way short positions build. They have days to cover, percentage to cover. And those are things that you have to look at and say, aha, I see it now. I see the way this business is going here. And you know what? Once you get enough people in the same crowd, or that mob can manipulate that stock either way. So I try to avoid those. I've kind of long passed myself, and if someone says, there's a big short, they're going to run the stock, yeah, great, they might do it. There's always another trade. I tell people, I like to make my money based on fundamentals.
You're how quaint.
That's it.
I have a funny story for you, actually. A buddy was telling me the other day about some pot stock, and one of his friends had taken it over in terms of trying to fix it up, and it was terrible business. It's going to go bankrupt, but yet it got to the eye of the Wall Street bet crowd. And so all of a sudden they ran this thing up, and this fellow decided to load up the ATM, which for those who don't know is basically an at the market.
Oh, that's right. Those things they're interesting.
Yeah.
Secret selling, I call those.
Secret selling, yeah, because we couldn't do that in our day. We didn't have those. And
geez.
The long and short of it is this fellow has gone and taken this pot stock. They keep coming for it, the apes and the Wall Street bets crew, and he sold $1.5 billion of stock. And it ends up being that now he's, has this hoard of cash, and ultimately the fundamentals are headed his way because he's able to buy the other names.
Right. He can buy out his problem now. He can buy his way into a successful company because an ATM gives you the right, and so as people who don't understand an ATM, not like a machine, but it gives you the right to sell securities. You have to announce it to the public markets. It's primarily done in the U.S., and you don't have to disclose anything, and they're not cleared by prospectus. They're already pre-cleared, where every share that buys in the market is buyer beware. You now own that share, and it's a new treasury share. Right. So that's really unique. In my day, you couldn't do that.
And I was telling another buddy that was phoning up, and I was saying, listen, we're sitting around playing this game with all these old guys thinking that we have to do bought deals or we have to do secondaries. And the reality is that if you go and get the eye of the Wall Street bets crowd and load up your ATM, you can raise money at a much more advantageous price to the company that way than the old way that we did it. And I feel like a dinosaur sometimes when I'm thinking about the old way that we used to do it versus this new reality.
Yeah, you're so right, Kevin. I think that it's hard for the average person who looks to say, I want to invest and make money. And people ask me this question all the time. I always tell them, when you're investing, there's two types of investing. If you're going to invest and you're going to be looking at the bond market and you're going to make a small return in some preferred shares, but having some tax advantage, you should always utilize your tax vehicles, whether it be an RSP or a TFSA, because that gives you some certain longevity and tax deferral, which is a win from day one. You will eventually have to pay that back, but it gives you some edge in the business. But when you start, playing hot new issues or the next hot pot stock or the next crypto stock, at one point in time, you could lose everything. So as long as you understand that if you're playing with no margin, you can only lose what you have. But when you start putting things on margin, I'm hearing now that you're going to be able to buy currencies, cryptocurrencies on margin, and there's people that do it now. Yeah. Man, that's going to be a lever. When you see a currency go from 0.0001 of a cent to 40 cents like a Dogecoin, and now they're going to leverage it.
Right, they already do it. My son does it 100 to 1 leverage. It is already happening. It's just crazy. It's part of what's driving that whole rally. Okay, so let's talk a little bit about your. You're no longer working at a sell side broker, and you're now. So now you're I guess a longer term investor, as you mentioned that you invest based upon the fundamentals. Well, I wouldn't say that. I provide advice. Right now, I'm working with two groups of people. One is a group out of the Toronto clinic called CVW. They're two doctors, Dr. Fabio Verlesi and Dr. Giuseppe Costa. Very smart guys in the medical field. They're consulting and giving ideas to look to invest. They did some work in the PPE business with me. They're very smart guys. They're at front edge. They're primarily in palliative care and in orthopedic surgery. So we're looking at pain medication, both from a palliative care point of view, which is, as your parents get older and grandparents get older, there'll be a time where they want to have a peaceful time prior to passing away. My mother passed 2 years ago, and it's a very difficult time. So making it as easy as possible in palliative care to make sure that the pain medication is not destructive to them is very key. There's a lot of things that happen, and I'm sure, we'll all go through that. And the other area is that, a lot of athletes come out of it and end up getting hooked on certain narcotics because of Oxycontin and all the pain medication. We're looking for ways to use CBD and other areas and injection systems to try to make sure that we can mitigate that. So really cool stuff, cutting edge technology and basic kind of pain management. Okay.
And then outside of that, I'm with a group that I call it a home office, where I have 3 guys that I've worked in the industry with before, all very accomplished, all very well. And we pool our money and we take outside money and we generally invest in deals. And then we look to either join the board of the deal or participate. Right now, I'm on the board of Mogo. I'm on the board of a green company called Evergreen, needless injection company called NewGen, 2 of which are on the board. Mogo is MOGO and NewGen is NGMD. And then I'm on 3 charity boards, and then, of course, the Mocambo.
Okay, so there we go. Now we got to mention it. For those who are not Torontonians, Mike went and did the legendary. Well, I'm going to let you tell the story. I didn't realize this. I watched an interview you did, and I didn't realize you are a budding musician, and you finally got to get your dream come true. Why don't you tell us?
Well, I'll tell you, buddy. I don't know what budding is the correct word. I'm a musician. I would say not very good. In my teens, I tried to play the Mocambo numerous times, and they said no to me. It was the most legendary place. Growing up on Yonge Street, Toronto, it was every young kid's dream who could play a guitar. And I never could join. I never could be and play on the stage. So I finally played the Mocambo. I tell the musicians, I just had to buy it first. And that's a true story. When I bought it 7 years ago, the day it closed, my mother was in the crowd. I had an open bar. All my friends were there, and I played the Mocambo. The first and last time I'll play there. But the Mocambo is historical and legendary. It was the first venue that U2 played, not just in Toronto, but North America, on March 9th of 1980.
I did not realize
a story
that.
Where they got paid $500. Tickets were $3.50. They were not sold out. I think they were 80% sold out. And they played their very first concert when they came to North America at the Mocambo. Of course, the most famous live album most people think is the Rolling Stones album that was Love You Live, done in 1977. But it really, for a guitar player, it was Stevie Ray Vaughan live at the Mocambo, which is John Mayer's favorite album, and any guitar player's probably favorite album. And between the Ramones and Blondie, Billy Idol, and host more people that played there, the famous concert was March 4th and 5th of 1977, coming up to the 45th anniversary, where the Rolling Stones played under the pseudonym of the Cockroaches. And it was April Wine who opened, and then the Stones came out with a legendary show, of which it was attended by, at that time, the Prime Minister's wife and Justin's mother, Maggie Trudeau.
Oh, that is awesome. Now, what's it like when you bought this club and you must be going and finding like archives and different things? Like, tell me about some of your experiences.
Well, we had to take the building completely down, dig down 30 feet, go back up another 15 feet to underpit to give it a bathrooms. And that was one of the things. If you don't have good bathrooms, the women aren't coming to your club, and therefore the guys aren't coming to your club. So we had to revamp it. We put over $30 million in the club, primarily in technology. We built fiber optics throughout the club. We have floating floors, so both floors are isolated and floating, which means that you have no vibrations, and they're completely soundproof from the outside and the inside. So you could have a rock and roll concert upstairs and an acoustic concert downstairs and not know the difference that someone's upstairs or downstairs. We have a full-blown recording studio with state-of-the-art cameras and state-of-the-art facilities so we can stream. We have a latency that's a fraction of a second. I think it's 0.006 of a second for latency. So when it goes from our stage to your house, it's immediate. And that's where I think the future is. Think of holograms and putting a concert in your backyard, which at the time you're watching it live at the Mocambo. You know, we only have 500 people per floor, so it's a limited attraction. We have a membership program for the Mocambo that we have the VVIPs, which are the balcony, and then we have front of the line access with some other benefits from the membership. You know, if you want to go to elmocambo.com and contact Alicia Hibbard, you'll find out some of those processes. But we're very excited. We have the likes of Walk Off the Earth playing. We have 5440 coming up to play. We're very excited for some of the shows coming up that are coming up from a variety of bands that are going to be bands from the past, you know. So having some of the members that played, that came in, and the full band from the Spoons, having Paul James do the rendition and playing the days that he played with Bob Dylan, having OLP, Our Lady Peace, open the show on October 30th. The Beach is a great new band. Harmonies. List goes on, and we're very excited to create diversity too, as we're having a Latino night. And our big opening Latino night is going to be the 18th, 19th of December with Jacob Forever, who's with the top three: Bad Bunny, Hector DeZona, and Jacob. Very big Latino band. We are having on Wednesdays events that are twice a month with Hughes Room and twice a month with Pride. And we do believe that the LGBTQ2S community has a safe place to go there and experience live music. Tuesday is Lemon Stage with Jessica Lemon, which is great new artists. We had Julie Black coming next week. We had The Beach is the other week. So anyone that is in her group, Jessica Lemon is a work of a force of nature. She's incredible at what she does. And then we have the mainline acts Friday, Saturday, Unplugged on Sunday. So we're creating, there's a black music segment that's coming on twice a month that we're working with Universal on with Mustafa. So we're very excited about creating this diverse platform, diverse music. And of course, trying to bring back the Rolling Stones would be my top challenge for March 4th, 5th of 22. I'm flying with a friend of mine, Rob Steele, down to Texas, to Austin to see them play. And I'm going to be lucky enough to spend 15 minutes with Ronnie Wood. So wish me luck to try to convince him to come to play the Mocambo.
Well, you already stole my thunder. My question to you was going to be for an old, you're slightly older than me, but I'd like to stay up with new bands and things like that, but not to your extent. You sound like you're even more so. So I was going to say, if you could give me one old band and one new band that you would love to see play at the Mocambo, I'd love to hear it now. We're going to have to now that you said that, we're going to have to take the Stones out. So the Stones are out. Give me an old band and a new band that you'd love to get to
well, I'd love to have Robert Plant and Jimmy Page playing at the Mocambo.
That's what I like about you, Mike. You go small always. You don't go real big.
Yeah, no, we're going big. We don't go small. If you look in the middle of the road, I'd love to have the Foo Fighters play there. And David Grohl is just an incredible, incredible artist.
He's a good guy. He's just one of the good guys,
all the new bands that are out there, there's so many to talk about here. But, I think that, in looking at the new bands, I think we have some pretty good new bands that are in Canada. And like I said, I'm happy to have Walk Off the Earth play there, and we have them playing there. And I'm very excited. They're an incredible band, very artistic, and I'm really excited to see that show.
Well, that's terrific. Okay, Mike, we're going to end with the questions, and let's start with your favorite investment book.
The Great Crash.
Who wrote that? I don't know that book.
That was written back after the 1921 crash, quite a few years ago, and it really gives you a pictorial of what the first thing happened. And I think that when you look at what happened, it's what can forecome later on. So I think that's a great book to read.
Okay, that's terrific. Now, I'm going to give you what I call the Byron Wien question. Byron Wien is obviously the strategist that was at Morgan Stanley, I believe, for many years, and he used to talk about his surprises for the next year. And the way he defined surprises was something that he thought the market had signed a less than a 1/3 possibility of happening, but he thought there was a greater than 50-50 chance of that occurring. Could you give us one surprise for the next year? Like, what is the one thing the market's not expecting?
I'm going to be a contrarian here.
Yeah,
I'm going to be a contrarian here and say two things. One, I think the market does not believe that we're going to see rates go up dramatically in the new year. They're calling 23 and 24. I think rates are going to surprise people to the upside. I think you're going to see inflation surprise, and you're going to see on a global basis a panic in the second half of this year with rates going up and the market oppositely going against that. So that's my call on that. I think that all asset classes, including commodity classes, which would include the oil price and some of the commodities that have risen to high levels, are not sustainable. You don't have a sustainable steel price or lumber price if you're looking at how replacement costs are going to be. Again, I'll be looking at staying in your house and not doing any renovations, just holding off for the time being, rather than paying 3 times the price today for lumber.
So I like it. And so next question is, are great traders, we'll put investors if you want in there, are great traders or investors born or made?
They're made. I think that, it's like I said, it's like doing anything. You have to lose first to win. And I think that those are the hardest lessons to learn, but you have to learn them. And I think you become, a trader at first and an investor second. So I say I'm more of an investor, even though I was a trader at first. You can trade 10, 20% of your position up and down, but I always tell people, you keep the good stocks and you sell the lousy stocks. Obviously our human nature is sell the winners and keep the losers because it feels good to make money. Hey, I bought it at $1. I sold it $2. But I bought the next one at $2. I bought more at $1. I bought it more at 50 cents. Oh man, I'm getting out at 20 cents. So I always like to buy stocks as they become successful. I buy up and I sell down. So what that means is that I'd rather buy a stock as it goes higher in price, knowing that the fundamentals are getting better, rather than try to catch a falling knife and buy a stock as it declines, thinking that I know more than the market knows.
Wise words. Okay, and the last question is, if you were to give advice to a young person that is interested in getting into our business, imagine I phoned you up again and I've time traveled and it's 25 years ago and I'm phoning Mike up for advice. What advice would you give them?
Well, it'd be different than when I started and what I would have given you before. The advice I'd give you is I gave it to my two twin boys, Adam and Ashton. I would say do your CFE course, get your course done, sign up. If you want to be in real estate, do your real estate course. If you're going to do anything, the times of just walking in and getting in the door are gone. There's too much competition. There's too much, what I would say, outside influence of people that have metrics to rank you. And I think now with the education that's out there, it'll be tough for kids coming out of university and getting decent jobs. So, you got to do a combination. You got to get out there early, do your homework, and get to school.
Sounds good. So, Mike, for people that want to learn more about you, your firm, the club, why don't you give everyone where they can kind of learn more about you?
Whoa. That's a long list. So go to elmocambo.com, elmocambo.com, and you'll see a lot of stories being posted there. That's where I do a lot of my social media. Go sign up onto Instagram for El Mocambo and Facebook and all the different channels. I spend more of my time now diverting away from me personally and telling my story on the El Mocambo as I see it through the lens of music and through the kids that are coming there and the new acts that are coming there. And then I relate that to some of the investments. A lot of the times I will talk to the investments I'm making as a way of talking about the music I'm doing. So God bless you, man. Kevin, thank you. It was great hearing your voice again. I missed those days in the 90s trading with you. I think you took me a few times with those trades.
No, I doubt it. I doubt it. But listen, Mike, I really, truly, I've been looking forward to this for a long time because, although a lot of our friends overlapped, I never got a chance to meet you personally and to say thank you.
Hey, I'm giving you an open invitation to the El Mocambo. So you come there, weck@elmocambo.com. You just send me an email and we'll get together.
Sounds great. Thanks again for your time.
All right, Kevin, you take care.
All right, Patrick, it's time for Talking Charts. What do you got for us?
All right, well, let's start off just reviewing the top three things from last week. And we asked the question, will Tesla be bought on dip? And, well, at least for the 1 week it was.
Oh, yeah, I would say it was really bought.
Well, it didn't make it back to its previous highs, but it was definitely bought on dip. It did go from about 1,000 to 1,300, so 1,130, and so it definitely a 10+% rebound. So yes, it was definitely bought on dip.
Before you go to number two, I think the real question is: does it get a new high, or is this the reaction to the reaction?
The bull trap. The bull trap. The famous and infamous bull trap.
I think it is. I think you should.
You think so?
Yeah.
Well, it can. Yes, unless Elon Musk starts buying again. There's going to be some announcement that he's unloading again, isn't it?
Well, no, I don't even. There's more and more competition. It's up a long way. I think it's going to be tough for it to rally from here. It's not got the same sort of excitement. Don't forget, he's just put a lot of new stock into new supply into the marketplace. I think it struggles. I think it's going to be a classic big run. You get the correction, then you get a little bit of a retracement, and then I think you sell that and it heads lower.
The interesting thing, maybe we could circle back to when we talk more charts, because the NASDAQ is ripping and Apple's breaking new highs. The thing is that there's in this kind of general space of these kind of names that have a big brand recognition, they're getting a lot of money flow, and that is Tesla just going to trade and march to the beat of its own drum, or is it just going to get the tailwind from the fact that those other stocks are doing well? Anyway, it's an interesting thing to watch for sure. So the number 2 was, can the U.S. dollar and gold continue to rally together? Well, they continue to consolidate together, at least temporarily. So both of them put in a short-term high. We Gucci'd it for everybody.
Yeah.
But so far, they still have somewhat traded still together, even if it is like they pause together. Well, the U.S. dollar, the euro did have a little bit of a breakdown here today, but overall, I don't think that they've decoupled yet. I don't think we can think.
There we go.
Otherwise, with the China and the U.S. summit, what did you
a nothing burger. I Gucci'd it.
Yeah, it was
That's
nothing
my
bad. And overall, the entire China market just doesn't seem to want to make any big, meaningful turnaround. And then it doesn't help with stocks such as Alibaba getting hit.
Oh, and, got crushed again.
Yeah, and
terrible numbers.
Yeah, and
terrible growth.
When you look at something like here, I'll put up this chart on the China Internet ETF, which is that KWEB. It really just can't. While it's not going down anymore, it's certainly not a bull trend. It's just.
I'm wondering, Patrick, if it's going to take the year end, and we're not going to get a meaningful move until we get.
I wonder whether you wrote about tax loss selling things. I wonder whether these are going to be tax loss sold.
Yeah, at the very least, I just don't know if anyone's going to sell their winners to buy this, and that's so maybe there's no selling in this, but there's no buying in this either, because for buying, something else needs to be sold or new money, and it just doesn't seem to be getting anyone's interest. Anyways, what do you got for this week for top 3 things?
So the first thing we're going to ask is, what we're going to watch is, will the Eurozone go into full lockdown? I'm gonna go and check it out, boots on the ground, to see how it goes. But
you're gonna go give us a live man on the ground,
man on the ground, live, absolutely. But will the Eurozone, Austria did lock down fully, and there's rumors other countries, there's certainly other Euro countries that have done full lockdowns for unvaccinated people, but not full lockdowns for the whole thing. But it really, everyone's so worried about the numbers spiking into Christmas that there's this preventative action being very aggressively taken. And will it kind of just trickle through the entire Eurozone? It'll be really interesting to watch, right?
I think the big question is, how much is built into the prices at this point? As you mentioned, we did have a big sell-off in the euro, and the Bund was bid in Germany. And the question is, as they go do these lockdown measures, is it going to affect the stocks and the risk markets, because it might already be there? And in fact, today I think there was an announcement that Germany was not going to proceed with the full lockdown as expected, and the initial reaction was for them to buy U.S. stocks. So I'm increasingly believing that this is priced into the market, and although I think it's coming and we're going to get more lockdowns, I think that we might it might be baked in.
Yeah. Number 2, is this a buy on dip on crude oil? And crude oil gets hammered $3 today. We're down to the $76 level on crude, and we're definitely in the midst of a correction. But over the course of the 2021 year, we saw 2 of these corrections. They lasted about a month. They were all of the kind of $10 to $15 pullback variety, and they were each time bought on dip. And the question is now that we've really seen almost a full, $9+ off the highs, will we see a buy on dip emerge next week?
So for me, Patrick, I'll test you to see if you read my letter. But
no, I didn't. I'm going to just openly admit it.
But I was early in the week very bearish on crude, and I was buying some puts. I was selling I was buying some 55s and selling on the USO. I figured it was all going to be at the front end, so I was more than happy to trade the USO. And I was buying the 55 puts, selling the 45s against it. And as we've gone down here, I'm keeping my negative delta, but I am selling extra 45s because once we get down there, I want to be long again. And I think that you're absolutely correct. We have these things all the time. This is all this is. We got some flushing to do. We're going to flush these people out. Everything's fine over the longer run. Over the shorter run, it's just got a little too bullish, and we need to clean the bar of some of the real degenerates.
There you go. You heard it.
So what do you got for number one? You listen.
Well,
don't tell me you put the U.S. dollar there. Don't tell me.
Well, the number one thing to watch? No. It's, should Kevin and Patrick buy the dip on Bitcoin?
You figured the dollar wasn't good, so you'll put the other
the asset that shall not be named.
Yeah.
And it looks a lot like the crude oil chart, doesn't it?
Yeah, it does, and it has a big correction. What is that as percentage-wise?
It's not like almost 20%. That's that's the buy on dip mark, right?
Yeah, we should get in there.
It must be cheap when it goes from 67 to 57,000, right? Like,
so I don't know. What are you thinking? Are you going to buy some?
Are you?
I've always told our crypto friends that the last thing that they tried to convince me to buy some, and I always told them the last thing you want me is for me to buy them, because when I start buying them,
when me and you are buying, that's going to be the top. It's going to be
over.
over.
You should sell it to us. You sell every coin you have or every crypto.
The old adage is that it's when the last bear turns bullish, it's the top.
Yeah.
And the thing is that so the fact that we haven't bought the dip is actually very positive for the
100%. We're doing them a favor.
Yeah, they don't.
We actually love
them.
They
don't appreciate.
That's
how
right.
Much
they don't appreciate us, Patrick.
All right, let's talk some charts. I wanted to just touch on was, when the Pfizer news came out, a lot of the small caps and airlines and everything took a real jump. Let's just actually use the Jets ETF here just as a thing. Like the news caused a jump to $25 on the Jets ETF. It looked like this kind of reopening trade was going to get some momentum. Small caps gapped and broke out, and then. I guess is it the Euro lockdown that might have just taken the wind out of the sails? Like it's too early.
I believe that's what happened. We had you're talking about today, the action today. I think that it was full on a return to the old lockdown trade. I laughed and said early in the morning it was the old sell KRE, buy QQQs algo got turned on again. That's the algo that they do. That's the way they express that view. And it just seemed to me that got turned back on today.
Yeah, so the regional banks here, like when we take a look here, they did reverse for sure. And
they were trading almost lockstep in reverse with the Qs.
Yeah,
it's almost whoever's long rotates between them depending on whether it's lockdown mode or not. And I definitely think there's a relationship there, and it seems strange and weird, but it's there. It's
right.
Probably our friends Jim Simons and Renaissance.
But look at that, like the Qs, like while the S&P 500, let's talk the S&P, we'll talk the Qs as well. But the NASDAQ just ripping, and a lot of like the darlings like Apple just ripping to new highs. Let me just pull up the Apple chart over here. But Apple just on fire. On fire. We actually
it's not
had
like it's the world's biggest company or anything.
No. But I mean, look, if Tesla can make a 30% run, then Apple can kind of throw on a few points.
I still go back to what I wrote, and it was about the 1998 and 1999 November and December period. If you go look at 1998, the NASDAQ rallied 80%. And then when you go look in those 2 months, and then if you go look in 1999, it rallied 60%. The violence of the move on the upside, it could continue going. So be careful fading this. That's all I'll say, because the old rule book's out the window. You got to dust off the 1998-99 playbook.
Yeah, like the Qs are running. Apple is running. Like I haven't looked at Fakebook, or actually, what do they call themselves? Meta platforms now, but like
the metaverse. Isn't it the metaverse?
No, Meta platforms.
That's the name of it?
Yeah.
Oh shit, that's a terrible. I thought it was metaverse.
Yeah, fake book is much better.
God. That's such a dumb name.
I think it sucks.
It's worse
anyway.
It's almost as bad as a.
You know what? When you're already such a gargantuan company, I don't even know why. Like, I still call Google Google. Like, if they think they're going to convince me to call it Alphabet, like, it's stupid. Like, you know, like, I don't know why when they approach $1 trillion market cap that they think that it's worth changing their name. It's like, what? Do you need a little more brand recognition or something? Like,
well, I think it's the other way around. They have to change their name.
Yeah, but nobody's going to forget who they are just because they changed the name.
I guess so.
I don't know.
I don't know, Patrick. You know what happens though? You think about your kids. You talk to your kids about something and they don't know what you're talking about, and it'll be like that with this Meta platforms, which is terrible. They'll be like, you know, their kids will say, "What's Facebook? That's so old." So eventually,
yeah, but
Facebook
Facebook
just takes a while. It just takes
but
a while.
But the Facebook site is still called Facebook. It's
Oh,
just
I see.
the company is
Yeah, that's
I think that they're just diversifying their brand, right?
I think that somebody has an uncle that's in a stationery or something. Let's get some new stationery. That's great.
All right, so what's it called? I just wanted to touch on the euro dollar, and just can't not touch on the dollar. But the euro just continues to eat it, and obviously the lockdown isn't helping. The bigger question here, like this 113 was a really interesting level in my mind for a short-term bottom, and it didn't hold so far. Like it'll be really interesting to see whether there's follow-through selling. The bigger question is if the euro can't hold like a 113 level, which is like a fib zone, when you go and look at a little bit of a bigger chart, I mean, that opens up the door to go right back down to like that 108, 110 zone below, and then me, you, and Cuppy will have to make a brand new stake bet.
That's right. That stake that you originally lost on.
Yeah,
the original stake. Patrick, I love how bearish you're getting on the euro. Love it. I will.
Are you a buyer?
So I'll admit something. I actually started trading currencies a little bit more these past couple of weeks. I've traded,
and you've been losing tons of money being long the euro, right?
No,
Just
actually,
admit it.
I was short euro yet.
Okay.
You know,
Okay.
So I like expressing non-US dollar ones, so I was short euro yen. It actually worked really well. I covered it today into the announcement. Now that I see how bearish you're getting, it's getting me excited. I'm thinking about maybe I'll have to.
I'm not. You know what? Actually,
you
no.
sounded
Stop.
pretty bearish. You sounded.
Oh,
pretty,
I'm
you were
talking about
excited.
I'm talking about the trend looking like shit, and this is a level that should have held, and it's not. But I actually we were long the U.S. dollar through the UUP at Big Picture Trading, and we took profits last week. Or earlier this week, and so we're out of the long dollar trade, and now I'm hoping that I don't have FOMO from it continuing.
You
to
will.
rip.
It's going to keep going. And you're going to be sitting there because you feel naked. It's kind of like me without gold. I don't feel right if I don't own a little bit. And when you're not long U.S. dollar, the world just doesn't seem correct. So
Well,
I
still have a huge amount of U.S. dollar underlying holdings. I just I don't have the long dollar trade. But I wanted to touch on this rally in lumber.
Oh, the lumber. I missed that.
Like, dude, it did a full pullback, and then suddenly someone lit a match under this thing, and it blasted. Like this week, lumber's just been ripping.
What a wacko contract, eh?
Like
literally, it looks like shit,
like,
and then all of a sudden it's just out of nowhere. It gets
when
weird.
are they going to realize that they need to change the daily limit up and limit down on this thing?
But then they'd have to work full days. They don't want that.
The pit's so small. They want to be done.
Tony Greer telling us the story about the guys that trade that?
No,
he knew them. I can't remember the full story. We should, for those who are interested. Tony Greer was on like the fourth show or something, and he told the story about the lumber and his Tony's Italian. And he's saying these old Italian dudes, and he said that I can't remember the full story, but it just I remember him talking about it. And I remember briefly seeing the lumber pit and walking by one time. And I saw someone walk in and bid for something, and all the four guys came screaming at him, sold, 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 sold. And I thought to myself, that guy is not getting a good fill because he just got pasted. Anyways, what's the lumber's good? What else you got for us?
I just wanted to touch on two other things. I wanted to touch on this cannabis ETF, and obviously that there's a little bit of that spin about mushrooms and psychedelics and shit like that. I don't
What?
even know that they're
What's the spin?
I don't know the whole story, but I probably think. But like there at least there was talk that they were talking about legalizing this stuff, and so
I
that
thought you were going to tell me like you're not supposed to mix them or something. Okay.
and the stock popped on it.
No, I don't think that was it, Patrick. I think you got your story wrong. I think it popped on the expectation that first of all there was the Republican. They went in and announced that they put through some sort of bill through. I don't know.
Right.
It's kind of complicated. But then I think what happened later in the week was there was some bad news, and it looks like some of it's not going through. So it's all sorts of games getting played on that.
What I think purely just from a price action perspective, irrespective of the fact that I clearly don't know the story.
You're mixing your drugs, which you should never do. Never mix your drugs.
But irrespective of that, the one interesting thing will be whether it makes a low or low. And like a lot of times when these fake rallies out and then they just sell into it, it'll just rip down to 25 and then just keep going down. It'll be interesting to see whether or not this starts establishing a trading bottom, because this is one of the ugliest charts out there. But basically from its early January, February highs, this thing has been relentlessly lower highs, lower lows in what is nothing but an ugly downtrend. This was the first attempt to reverse that downtrend all year, meaningfully anyway. And what will be interesting is a way of confirming that would be if it doesn't make a lower low on the sell-off. And I think it'll be at least worth watching, because some people like to buy low. And if it starts establishing a base, at least it'll be something traders can lean on. Can
I talk about that?
Yeah.
So I think you should put away all your gobbledygook charts and go purely on time. This thing is going to bottom with the tax loss selling. I'm not exactly sure whether it'll be the second week in December, first week, or the last week. Sometime in December, it's going to bottom. And even if it's looking ugly and it's breaking down and everyone's telling you how ugly and it's going to go to zero, you should buy it in that time frame. Or at least I'm not telling you should buy it. I'm going to buy it in that time frame. I'm already long, but I'm not long the full position, and I am going to start adding to it in terms of time as opposed to price.
You can do it by time, but I bet you my squiggles will show it when it's starting to break out. So you could I think a combination of the two.
It's good. You know, as I listened to you though, I realized you talked about how ugly the chart was, and then you talked about how we had this first initial attempt at bottoming, and I thought to myself, he's right. It never goes down and then bottoms on the first try.
Yeah.
So it wouldn't surprise me at all if that thing goes to new lows, sucks in everyone,
or even just double bottoms and kind of muddles along. Yeah. There's all sorts of scenarios, but you're right. It probably may take the rest of the year to base. I wouldn't push back on you on that. The last thing I wanted to touch on was this consumer discretionary ETF, and I just thought it was super interesting when finding out the holdings of this thing. Did you? I
don't know. Is that got Amazon? Is that the?
Yeah, okay, so it's an ETF. So when you think you're buying a diversified ETF, then what's it called? You think you're going to buy this thing, and you're getting. Look at the top 3 holdings by weight. Okay, Amazon 20%. Tesla 20%, Home Depot 10%. Basically, you have an ETF where 3 stocks make up 50% of the holdings.
It's like the Canadian stock index in the 90s when Bell and Nortel was like 30 or 40% of the TSE.
Exactly. So like when you're buying this ETF, the Spider Select XLY, you're essentially just loading up on Amazon, on Tesla. Yeah. That's what you're doing. And you're throwing a
little public service announcement. As the market becomes more and more concentrated in those few names, you should increasingly look to for ETFs that are equal weighted. Yep. And I'm a big believer that equal weight ETFs over the long run, if you look at the data, they outperform. The question, the problem with them is twofold. One, that it has periods that can be years and many years where they underperform. And most endowments, money managers can't handle those sorts of underperformance periods. And then B is that if you are CalPERS or someone big, you can't trade that because you need the liquidity of a market cap index. That is the reason that those market cap indexes were designed that way. It's because when they're going to buy large percentages, they have to be able to allocate more to the ones that can handle it. But for a regular Joe or Joelle, you should go and have a look and see if you at the advantages of an equal weight index. And I think never before has it been as attractive as it is currently.
I hear you, bud. Like that's the RSP versus the SPY argument all along. Yep. But you know what though? The problem here is that you know, just like that QQQ trade's been working, those FANGs are so overweight into the market cap weighted that if they run here, then your statement here is not going to work for the next couple months. Yeah,
you know, like in the big another year, another 2 years.
In the bigger picture, you're dead right.
Going 20 years. If you're looking and trying to design a portfolio for 20 years.
Yes, you should do it.
You should do it. We don't give investment advice, but you should definitely look into it because over the past, 20, 40, 100 years, equal weight has outperformed market cap.
There you go. All right, so let's move on.
Patrick, this week in trading history, what do you have for us?
Well, this week, I just wanted to keep it a little bit lighter. I didn't want to talk about another bear market, so we're going to talk. It was
you call it This Week in Bear Markets with Patrick Ceresna.
They just make such good history.
All right. And you should have a little side notes. This week in the dollar going up with Patrick Ceresna.
Well, the update on the dollar, it's not always going up, but at least it's important.
No, you can pick periods when it went up a lot.
There you go.
Like, I love this period. The dollar was going up a lot.
All right, so let's talk. So it was back November 15th of 1867. The new invention that would change Wall Street forever was revealed in New York City. The stock ticker was introduced by Edward Callahan. So now, little history on Edward Callahan. He quit school at the young age of 11. Back then, there was a lot of stories like that. Can you imagine your kid like quitting school at 11 and said, "I'm going to go work"?
Yeah, I got some plans.
I don't have time for school. I want to get on with life.
Right. I got some plans. I think I got this thing figured out. Thanks for those, 6 years of school or whatever. Because 11, so you finish your grade 6, and then you're like, okay, I'm done.
I'm done. Who needs middle school?
Yeah, who needs middle school? It's overrated.
I got my ABCs and 1, 2, 3s, and that's good enough. All right. So anyway, he quit school at the young age of 11 to go work as a telegrapher, tapping out words on a machine that sent messages over wires. His ambition to succeed in business world eventually led him to the Gold and Stock Telegraph Company in 1860s. And while an employee, he invented the ticker tape machine. His goal was to replace messenger boys who would relay stock, bond, and commodity prices to brokers and investors with something faster and more efficient. The New York Stock Exchange purchased this invention, which led to the increased flow of money and the centralization of trading. Now, the ticker tape machine typed out printed stock exchange transactions sent over telegraph wires, which made the ticking noise as it worked and printed out long tape, hence the name ticker tape machine. And what you'll hear many of us still reference today is reading the tape, right? It comes back from these times. But then in comes Thomas Edison. Thomas Edison then improved upon Callahan's invention, designing a mechanism that synchronized all the machines on one line. This eliminated the need for employees to monitor and reset them if they fell out of unison. Thomas Edison would improve the device in 1869, which would become Edison's first successful invention, which he would receive $40,000 for his invention.
Oh, that's a lot back then.
I was about to say, most people don't appreciate that, but $40,000 back in 1869.
It's only because I was there that I can know how much that was.
That was stupid amounts of money.
Yep.
So after Edison's success with the stock ticker, he could afford to set up his own laboratory for research and innovation. As we know, he would of course be go on to be one of America's most famous and inventors, it was made possible by the improvement of the stock ticker. And so, so a little bit of history of how it all came together. So just a little bit more. Previously, stock prices had been hand delivered via written and verbal messages, and since useful time span on individual quotes was very brief, they generally had not been sent very long distances. Aggregated summaries and typically for one day would be sent instead. Instead of the speed provided by the ticker allowed for faster, more exact sales. Since the tickers ran continuously, updates to stock prices whenever the prices changed became effective much faster. The trading became more time sensitive, and for the first time, trades were being done in what now is thought of near real-time prices. And so it's amazing back then. I think about how once internet came along and the ability to just get a stock quote on your phone came in the 2000s and late 90s. It's pretty amazing. Like this was the big revolution back then. And so by the 1880s, there were about 1,000 stock tickers installed in offices in New York bankers and brokerages. In 1890, members of the exchange agreed to create the New York Quotation Company, buying up all other ticker companies and to ensure the accuracy of reporting and price volume activity. And so it was a really interesting time in history when this was all invented.
Patrick?
Yeah.
What 1990s were you in that you had a phone that gave you quotes?
I lied about that. I literally make shit up, Kevin. It's like
I'm like, you must have had the super secret CIA version that I didn't.
My Motorola flip phone would.
I think you just got your digits off. I don't think we got quotes on the phone until
on the internet. I didn't mean phone, but on the internet websites and stuff like that.
I'm here just to give you a hard time, so
no, but you know what? I did fub it up, so you're here to keep me honest.
Yeah.
That's the
Otherwise
way.
We're gonna get calls. People saying Patrick's living in the wrong era. Anyways, thanks for that wonderful story. It's terrific. Okay, time for skin in the game.
You won one, Kev.
I know, I did.
It was a Duke and Duke. It's the most honorable win.
Well,
it's the most honorable.
But let's be honest here. You played that pretty well. Like you tried to trick me into the let's do it, Duke and Duke because I don't like my bet, and it was well played. Well played doing the Duke and Duke.
Well, you know what? I still have to dig up a crisp $1 bill to.
Yeah, you know what he's trying to do. By the way, folks, earlier he's trying to convince me that I should take a Canadian. It's not even a bill. It's like a coin.
I have a dollar bill. No,
and you're trying to rip me off.
I wasn't going to give you a coin. I have a vintage $1 Canadian bill.
I didn't know that.
It's a classic collector one.
Do you actually have a $1 Canadian bill?
Yes, a nice crisp.
I'll take that. Because I have a couple, and I'll take that for sure. I'll take that. That'll be awesome.
Thank you. That's like it's the honorable way to settle it. Okay. Well, because you know what, there's plenty of U.S. dollar $1 bills floating around.
I didn't realize you were giving me an action. I thought you were trying to give me a coin.
I wouldn't give you a loonie.
Yeah, I always love when Americans come here and they for the first time and they see the coins.
And they're like, "What the fuck is this?"
I still remember when I was a kid going to England and getting off the airplane. I went to play squash when I was in grade 7 or 8. I can't remember. And I get off the plane and I've gotten all my pounds, so these notes that are huge. And I go to buy some gum or something, and they just hand me back all these coins. And I was sure I was getting ripped off, but I was too timid to say anything. And the thing about England is that there's the coins are all different shapes and sizes, and there's just no uniformity. I don't know if they've gotten better now, but there's shillings, pence. It's a shit show. It's as bad as ours is. Theirs is worse. And it just looks like a fruit salad of coins that they hand you. Okay. Well, anyways, you did win. Why don't you tell people what we bet and
we took the high-low range for crude oil. Actually, so this is a Jan. We got to go with December contract that we were settling on, and we simply were saying, will this week's range be greater or more narrow than the previous week's range, which was $5.19? And it clipped 6. right? And so it was that, and it all came at the end of the day with this $3 drop.
Yeah, I got lucky.
I was literally winning right up until the market opened today. But that's what it is. It's 5 days. But we got to be careful because this bet this week has got overlapping the Thanksgiving closures.
Oh, you actually reminded me that I did not.
And the other thing, by the way, I can't believe we didn't bother to mention it, was the OPEX.
You always want to stick that in there every month. It's kind of like
and it's funny. We basically didn't even bother to mention.
It's kind of a non-event. Let's face it, not much.
Well, I just think that there's room for there to be more volatility, both either higher or lower.
You mean afterwards? Now that you think it was pinned,
and
now we're going to...
Yeah, well, the 4,700 had something like $10 billion of gamma pin
That's
going
just
there.
A regular day these days.
Yeah, but I'm just saying that there's room for...
Pretty sure that guy from Korea that's YOLOing weekly Tesla calls trades more.
All right, let's go on.
Okay, let me tell everyone about the game. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by next episode, and the currency for the wagers is as follows. A Duke and Duke, which is a crisp $1 American bill, or Canadian bills, no loonies. Pint of beer, a burger bet, a pitcher, a case of beer, a bottle of wine, and then the Big Daddy, the steak dinner, which I seem to lose every time I bet. The winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting in positions. Okay, let's pull up. I'm winging this. I was going to try to see which way you were leaning and see if I could, suss out any weaknesses. Can you pull up both the U.S. dollar and the euro? We're going to bet on this. I got to figure out which one I want to bet.
Okay, so the euro. Oh, here's the euro USD. Or do you want the Dixie as well?
Okay, so where is that? That's
the 112.80.
Yeah, and can you zoom out a little bit so I can see a bigger chart? We'll do this one. 112.80.
Yeah.
Okay, so we're gonna do higher or lower. And what was the low today?
Well, the low on an intraday basis.
Yeah.
Was 112.50.
Okay. Higher or lower? 112.50.
Higher.
Oh, you bugger. Really? Okay, well, we're not going to have a very good bet. But that's fine. Let's just...
Well, do you want to do a Duke and Dukes? Throw some dollar bills?
Well, no, because no, let's do
a burger?
A pint of beer. We haven't bet a pint of beer in a while.
All right.
Okay, there we go.
I'm good with that.
Okay.
I'm good with that. My confidence level's not that high on that, so I'll take your bet.
Okay.
All right.
Time.
So let's go on.
Yeah.
Time for No Stupid Questions. Lena.
You got it ahead of me.
Help us out.
Yeah.
Are you ready to give us some stupid answers?
Yeah.
Always. It's kind of unspoken.
All right, so first one here. Hey guys, love the show. Big companies splitting and spinning off components seems to be in vogue right now. Can you think of any periods previously when this was as prevalent? Any general thoughts on why this is happening now?
So this is a great question. This Kev here. I'm going to take this one. It's a great question. I was actually reaching out to our buddy Cuppy because I was going through his Cuppy monitor or whatever that thing is, and I was looking at all the different opportunities there were in the spin-outs, and I noticed there were tons, and it seems to be that they're happening with more regularity. I managed to make a complete mess this week. I tried trading the KD, which is a spin out of the IBM. And it might be because I'm Canadian and I was attracted to the symbol because it reminded me of Kraft Dinner, which is our favorite macaroni. And I was probably a little biased, and I bought it because I thought it was down and out, and the selling continued and continued and continued. But I have noticed there's more of these. And so the first thing I will say is that you are correct. You did notice there's more of them. I noticed there's more of them as well. I do believe it's an opportunity. I do believe that there's all sorts that have been working. As long as you don't listen to me and buy the stupid IBM ones based upon a macaroni. And in terms of why there's more of them, I have a feeling it has to do with the stock market not appreciating certain fundamental aspects of companies. Right now, it seems to me that the stock market is rewarding the very best promoters, the very best growth, and it's almost like a winner take all situation where you have, for example, Tesla captures everyone's attention and grabs all sorts of money, and there's all sorts of people that are willing to buy that stock. And then when you go and you look at a company that has a variety of different of different companies in there, it doesn't seem as exciting, and it just nobody buys it. So therefore, there's parts of the companies that end up being tremendously undervalued within that kind of conglomerate of crap. And so they're spinning them out, trying to get it so that the market will realize the various fundamental values of different parts of it. And so ultimately, I believe that is why it's occurring. I can't remember in history of when this happened. I do know that there are other periods, and the trouble with me is all my trading kind of blends into one. I can't remember if it was the 90s or if there was a period in 08, before 08 that we had more of these. But we definitely have them. I think that it would be more likely to occur in a bull market when not everything is getting dragged up and people are trying to extract more value by separating different companies. And great question. Go do some homework on it, because I think that there's lots of opportunities there.
All right. Number 2.
Good day, gentlemen and scholars. I sit here staring at my screen knowing I am going to have to wait 2 to 3 business days for a trade to settle before I can swap the funds from US dollar to Canadian dollar to buy the next stock I want to purchase. In the past, you have advocated for keeping the system. Why? What are the advantages to having to wait to access these funds? I just don't get it. In these assets which shall not be named, I can get near instant settlement and move along with my day. Using T+3 settlement feels like using a horse and buggy. Don't even get me started on waiting for 3 business days for Interactive Brokers to clear a deposit. I know wire transfers are a thing, but I shouldn't have to go to an RBC branch to send $10,000 to my broker account in some reasonable amount of time. All the best.
Do you want to start, Patrick? Or you want
No.
me to go? Okay, I'll jump in. First of all, I don't know if we ever advocated this system. He asks, we've in the past you've advocated for keeping the system. Why? I think what we probably were advocating for was the structure around the banking system and the checks and balances and things like that, and it's more just the free-flowing nature of crypto and the credit risks that we have on that side that scared us. So it's not like we want T+3 and we think T+3 is terrific. And in fact, if I could snap my fingers today and make us T+1 or even T+0, I would do it. There'd be no reason to do it. And in my day, we were T+5. And it was a function of, it used to be T+5 because it was difficult to settle trades. And it's actually funny because Mike talked about this very fact that during the 1987 crash, he was able to trade for 5 days before anyone figured out that he was offside big money. So it's not that I think this is a good system. I just think that the banking system upon which it's based is important, and I hope that we get it more efficient. Now, there's a couple other issues there that you went through. First of all, you say you have to wait for that money to be settled before you can convert it to the other currency. Many brokers can allow you to borrow for those 3 days or 2 days and do the trade. In fact, Interactive Brokers, I know, can let you do the transfer before the settlement. So that's the first thing. So if you're not able to do that, you should go look into it, because you should. And then the next thing is, I understand for the wires, it's a pain. I get it. Going down to your branch is a pain, and the clearance is a pain. But those are a lot of the problems that you're having are actually because Interactive Brokers doesn't know you, and they don't have the ability to go and say, oh, he's a good guy, he's good for it, there's no issues there. When you're dealing with actual, let's just say, even your Royal Bank broker, if you were to go get a Royal Bank broker, that more than likely they would let you trade right away. So, for example, when I send money to my Interactive Brokers, I have to wait as well. But when I send money to my other broker, I can just tell them I'm good for it, and it gets done. And I'm not trying to say that's great or that system's better. I'm just saying that in reality, a lot of these holdups are for smaller, purely electronic firms. And the reason that they're doing this is because people are trying to rip them off by impersonating people and doing fraud or something. So they have to figure out a way to go around it. You might love the asset thou shalt not be named, and you think it's terrific. And I do understand and appreciate that there aren't any of these hang-ups. You can transfer money back and forth, and it goes really quick. We'll see if that ends up being a good thing or not. But I just want to stress, I do not advocate for T+3. It's not like I love T+3.
And there are companies that are already trying to develop the technologies to create that instant clearing using the technologies. I mean, it's a matter of time. Things move slow. When you have the markets and the banks and the infrastructure as big as they are, you can't go and change everything in overnight.
Well, and the other thing I will say is one of the things that I'm most happy about crypto is the fact that it is biting at the heels of traditional finance that has been sitting on their laurels and not doing things quickly enough. I compare it very similarly to when Napster came along. Napster came along. Before that, they were trying to charge $1 a song, the record companies, because they were used to selling records or CDs at these inflated markups. Napster came along and everyone just started stealing music, and they said, holy shit, we're going to have to change this, and it changed the whole pricing model. But the reality is, until Napster came, there was no incentive for the actual record companies to change the pricing model. So from that perspective, I think that crypto has been great, and I think that you will find that a lot of these companies will realize that this is a big selling feature. You're sitting here writing us complaining about all these issues. A smart company would realize this and say, hey, there's no reason why we can't do all those things. Let's do these things, and hopefully we'll get some more business. So I think it's great from that perspective.
There you go. All right. Last one, Lena.
So last one here. Hi, Mike from Poland here, an avid listener of your great show. I'm kind of sad that we were third in the beer ranking that you've mentioned some time ago, but doing my best to move us up in the next edition. This question might seem a little philosophical, but I'm really curious of the answer, and I think that it might reveal a thing or two about investing. Kevin often asks his guests about their favorite investing book, and a lot of them seem to like this guy, reminiscent of a stock operator. Just kidding, it's a great book. I'm always puzzled why nobody mentions One Up on Wall Street by Peter Lynch. I know that it's up to guest taste and preference and so on, but is there something about this book or Peter Lynch that I'm not aware of? Was his methods declared outdated or considered no longer applicable or anything? How is he and his method viewed nowadays? I know that it's different when you manage the amount of money he did and so on, but I really think there is a lot of good things in this book, even for small folks like me. I'm just curious because for me, it's such a great book. A lot of wisdom with a lot of laughter, just like your show. I always listen to you while running in the mornings, so thanks for making me looking like an idiot when I burst into laughter every other minute. Disclaimer, I'm listening to you for like half a year, so maybe before that some guests indicated this book.
So this is a great question. Hi, Mike from Poland. It's a terrific question. And in the past, I would say that it did fall out of favor. And it fell out of favor for a variety of reasons. They thought they were more sophisticated. They started looking at fundamental values. There was different ways to pick stocks, the rise of quants, and this Peter Lynch that had been at Fidelity and ran, I think it was called the Magellan Fund. It was one of the greatest funds of all time. It did terrific. It basically made Fidelity what it is today. He advocated a more of a philosophy of buying what you know. What I will tell you is that in the last couple of years, there has been an increased amount of people using this sort of philosophy. And one of the perfect examples that I would give are the guys called Dumb Money. And Dumb Money are these three fellows, and they call themselves Dumb Money because they're not from Wall Street. They have no kind of securities background at all. And what their kind of strategy is, he does what he calls social arbitrage. And by social arbitrage, he looks around and he looks at the trends that he sees in the actual environment or in the economy. And he says, I can see these trends continuing, and often the market does not appreciate it. So he doesn't sit around and say, how much debt has it got on the balance sheet? How much is this or whatever?
Yeah.
He just looks and says, do I expect this company to be selling more of this product going forward? And the perfect example the one fellow gives all the time is he talks about the iPhone. So when the iPhone came out, it initially was only on the AT&T network. And AT&T network in New York City is notoriously bad, and nobody liked it. Everyone was shitting all over it. And he was in Dallas, I think it was Dallas, somewhere in Texas, and he saw all of his friends using this iPhone. It was like everyone was excited about it. They thought it was terrific. And he looked at it and he said, hey, do you know what? This is a social arbiter that I can do because the market does not understand how popular this is going to be. And I would contend that his social arbitrage, quote unquote, is almost exactly what Peter Lynch said when he said, buy what you know.
But you have to think like what are the largest market cap behemoths that continue to run away? And it's the biggest brands, the biggest recognized things, whether it's Tesla or Apple.
He's doing more than that. He'll go buy. Like
no, I know he's doing more than that. But
brand, like Chico, there's some.
All I'm just saying is that this is
that everyone loves.
All I'm saying is I still think that the market still does follow this in some degree or another. I'm just trying to say that I don't think that this is outdated. You're
saying that the fact is, but why does nobody mention it? Why does no one talk openly about using this strategy?
Yeah, that's true.
Right? Nobody will go and say, I bought this because all my friends are buying iPhone, so I'm going to go buy Apple.
Yeah,
they'll give you some fancy dancy that it
yeah, but like when we're trying to talk, when we're all trying to talk smart, it's very retail to kind of make a perspective like that, right?
I maybe, but I would contend that there are some, and these fellows are doing it, and there's more and more. So Great question, Mike. But I would say that it's made a comeback, and we'll see if it continues.
Yeah. All right, Lena.
Ultimately, 1 second. Can I just add a little more? Ultimately, though, it helps to be in a rock and bull market. Because no, honestly, because let's think about this.
Dude, of course it does.
No, but I was thinking about this. It's like, why wouldn't I use this strategy? And like, what makes me nervous when I see the dumb money guys? And the thing that makes me nervous about the dumb money guys is that they'll be the first to tell you, I don't care about balance sheet. I don't care about the debt. I don't care about this. I assume the market has already priced all that into the market. And yes, I completely understand where he's coming from, but what it doesn't do is give you any idea about the amount of risk that might be in there. So Apple, with all sorts of cash on the balance sheet, has a lot, let's say, I can't remember what happened around the iPhone, but I think that at that point, we had already had the stores were already in place, and they had already done the deal with Microsoft, and their cash flow was better. But let's say they hadn't done that, and they were teetering on the edge of bankruptcy. They could have the greatest product in the world. People are buying it, but it ends up being that the balance sheet makes it a much more risky investment. Right. So it helps to be in just a rock and bull market where the balance sheet doesn't matter and that you don't need to worry about the risk side of the equation. It's just a matter of trying to pick the winners. Anyways, that's just my two bits.
Perfect. All right. Lena, where can they submit their questions?
So if you'd like to hear more stupid answers to your great questions, please submit your questions to nostupidquestions@markethuddle.com.
All right.
Before we end, I just want to have a quick little chat, Patrick, because I know some people are having some trouble. I found that I talked to a lot of different traders, and I've noticed that recently there's more people stumbling. And I didn't have a good week, and I must say I was talking to my my head of risk for one of.
Come on, you were short oil. Well, how do you?
I still managed to fuck it up. Like you know me, I can figure out lots of ways to fuck it up. And I was talking to him, and he's a terrific fellow. This my head of risk for this other group that I trade with, and he gave me a pep talk, and I was like, oh, you know what? That was a great pep talk because. The reality is I would have given someone else the other same pep talk. And I was thinking about how probably there's more people that right now are having some trouble out there, because I do believe the market is changing and it is getting a little more difficult. And so I just like to say a couple of things. First of all, don't get too despondent. You're having a tough week. Just remember what's really important in life.
Yeah.
The other thing is trade smaller. That's the easiest, simplest.
The another wisdom that you've said before is do more of what's working and less of what's not.
Yeah, stop fighting stuff. Just stop fighting stuff and trade smaller. And just get yourself out of the rut. I know that I've seen it. People get into ruts. They think this has got to happen, and it's been happening for the last 6-9 months, or they've been conditioned. And when things change, they spend too long figuring it out. Just keep trading smaller until it starts working, and just remember that what's really important, and do less of what's not working and more of what's working, and keep your chin up. I just want to say that because it's not me. I've noticed a lot of people are actually struggling recently. And listen, some other people are knocking it out of the park. Great for them. Good for you guys. Continue on. But I do believe that we had a period where things were super easy and there was a lot of people making money, and that really wasn't as normal as everyone thinks it was. Yes, you have periods like that, but usually the markets are tougher. Usually it's more difficult. And just remember that, and remember to play for the long game. Anyways, that's my little pep talk. Keep your chin up, folks. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. We're there on Twitter every day, and you got to check out Lena's new merch. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest visuals, or latest content. I'm sorry. And please, if you could, rate and review us on iTunes. We all know why. Patrick, where can they find you?
You can find me at bigpicturetrading.com or follow me on Twitter at Patrick Ceresna. And Kev, where can they follow you in that great newsletter you write?
I'm on Twitter at Kevin Muir, or you can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show. Okay, so I suspect for this beer, we're going to be it's going to be one of the tightest distributions of prices we've had yet.
You think so, eh?
Yes. Variability is going to be very low.
All right, you want me to go?
Well, I should go first, because if I don't, I'm gonna make it tight. I'm gonna be like, oh yeah, okay.
All right, okay. Everyone think of their score first. That way we can really find out what.
Write it down.
Yeah.
No cheating. It's the honor system.
All right.
Okay.
All right.
You go first, Patrick. I wrote mine
All right.
down.
You wrote your down?
Yeah.
I'm giving it an 8.8.
Oh shit.
Oh my god.
Okay.
No, but look, it's a great beer. It's nice, clean tasting. But I've already told you many times before, for a beer to get a 9. I'm reserving it for only the most special of beers. This is a great beer that deserves a high score. 8.8, I think, is a very high. It's a very respectable score in my book. It's a good beer.
Okay, I went 8.2. I thought you were going to be lower.
Really?
I liked it. Anyways, ditto is all I can say. Great beer, terrific. Where is it from again? Hungary?
Yeah.
Yeah.
The terrific beer. Actually, I think I'm watching a show that is based in Hungary. It's this French detective show. I can't even remember it now.
French detective show.
Yeah.
Is it on Netflix?
It's on PBS, so I got to listen to an hour
PBS.
about PBS. I got to listen to the River Cruise commercials before. You ever seen those? You guys know what I'm talking about. Julien Baptiste. It's called Baptiste. And I think that it's in Hungary. Let me just see here. I can't remember. Season 2, everything you need to know. It's beautiful, though. Whatever this is. It is.
Budapest is one of my favorite cities.
What is that?
Isn't it like a combination of two names?
Yeah.
It's not like one word. It's actually two
Yeah,
words.
Buda and Pest, which is like new and old, like new city, old
Something
city
that
type
I
of thing.
know.
Oh, is that really?
Yeah.
It actually sounds like you know what you're talking about here. So I'm having trouble like figuring out something to kid you about. I'm out of my league. I'm just going to let this one go and hope that you're
there
saying
you
the
go.
right things.
I probably made something wrong, said something wrong, but we'll, you know what? I'm pretty sure.
Plenty wrong during the show. It's okay.
Yeah, I reserved.
It is. It's filmed in Hungary. I got it right.
That's great.
Yeah, it's beautiful.
PBS,
I've
I don't
never
know about
been.
those
Have you
movies.
been, Lena?
No.
It's all you guys got to go.
That's
It's
one
great.
part of the
It's
world
great.
I need to visit.
I have a great story from back then. It was because that was the first stop when we did we went to the Oktoberfest. So what we did a drinking tour that started in Budapest and we ended in Munich.
Well, you can't. You got to tell us now.
Yeah, no, it was a great
No,
the
you got to
story.
tell us the story. You can't tease us with the story.
Well, me and my one buddy basically went for like Hungarian goulash, like an all-you-can-eat place, like €7 type of thing. But a couple of our other buddies are like all hotshot high rollers. No, they want oysters. Like we're nowhere near a freaking ocean, and they want to go to an oyster bar and freaking. In Budapest, so they look up the best oyster bar, and it ended up being some sort of steakhouse, and these guys go down there and they start ordering. They got like 100 oysters. We get there, we start like dipping into all of these different like oysters. They're getting like the bone marrow, you're getting the whole thing, and then they're like, hey. They're looking at the price on the wall for steaks, and like a bunch of North American boys, they have no clue that they price in Europe by 100 grams. So like they're like looking, oh my God, it's like only like $13 a steak or something like this, right? Like a €13 a steak.
Everyone, steaks all around.
Steaks all around, right? And so like they're ordering these big steaks, like thinking like the thing, and they're full. They've eaten like 100 oysters and all this stuff. These steaks come, like they ordered like €700 worth of steaks.
Come on.
And they had no room to eat them. And so we walked out of the frickin' restaurant with to-go bags, and the guys give the frickin' steaks to a homeless man sitting outside.
Luckiest day for that homeless guy.
Yeah, forget about the homeless guy.
But it was,
I'd hang out
it's
there.
like a typical freaking North American rookies
don't have a clue.
don't have a clue that they price things that way. Anyway, that's my story.
That's a good story, Patrick. I like that. So so that was you went on a drinking tour of Europe, basically. You're telling me.
Yeah. We
that
went.
was the start, and it went downhill from there.
Oh yeah, of course.
Kevin, don't we know that any tour that Patrick goes on is a drinking tour?
But we ended up in Munich with in the Oktoberfest tents back in 2016. It was awesome.
So one of my favorite brokers that I listen to, or that writes kind of up to dates, he is a huge Oktoberfest fan, and he goes on and on. He says it's basically the best event that he ever has gone to, and this is a guy I found out that's gone to 30 Grateful Dead shows, and he thinks that the Oktoberfest is way better.
It's awesome.
So it must be pretty damn good.
Yeah, but yeah, it's funny. They only serve beer by the liter, and so there's like the girl comes in, says, "Who's it? Who told us that story on the Huddle?"
I know who it was. It was big tall guy, Brent Johnson, I think.
Yeah. Well, who it was? Anyway, the girl goes, "Can I have like a half beer?" And he goes, "No. You gotta wait till you're thirsty and then order the big."
So when is October? It's obviously October. So
No. It's actually late September.
Oh, it is.
It's a late September event.
Okay,
yeah.
so it's getting ready for October.
It's gone.
It's like we're gonna drink a lot in anticipation of October, where we're gonna drink even more.
Hopefully this COVID shit finally opens it up. It might be a worthy trip.
I was gonna say, like the Market Huddle visits Oktoberfest definitely sounds like something up our alley. Where do you go? Is Oktoberfest it's kind of like Easter, right? It's everywhere. Is there one big one, like one big place?
Well, yeah, they have all it's in Munich, and they have like all of the.
No, but they'll have one in Berlin too, right? Or am I wrong?
No. There's only the one place that's the main one, and they have like all the major beer houses there with huge tents and that host the things there. It's a huge event down there. I'm trying to remember how many different big beer tents, but these beer tents hold like thousands of people, and it's just an absolute shit show. It's
I'm trying to look and see where Munich is. Oh, you know, it's too bad. It's because we could have gone if it was a little bit later. We could have done some skiing.
yeah.
It's near the mountains. I take it.
Yeah, well, we could combine it into a ski trip for sure.
Well, not that time of year.
Take it. Well, no, it's true.
We'll have to figure something else out. I see Nuremberger is there. Like we go do the race car, make fools of ourselves. Put a rented German luxury sports car into the wall. How funny would that be?
No, it wouldn't be. It wouldn't be funny at all.
Yeah. You know what's funny is that racetrack is just a regular road, so anyone can go do it. So you'll be going along, and you could literally drive your little Honda Civic on it if you wanted to. How great would that be? You're sitting there, and then all of a sudden these Lamborghinis and stuff go flying by you. Hey, I got something to tell you. I went to my first movie.
Oh.
Ooh.
Yeah.
Dune or Bond?
Oh no! See, I went to see Belfast.
Oh come
It
on!
was
You
really
did.
The black and white movie?
I think it is black white. Yeah.
You think it's
but-
black
but
and white? You said you went to go see it.
I can't remember. I think it is black white.
I wasn't paying attention.
No, listen, it's awesome. Like, and if you gotta like slow movies, and you gotta and
It's awesome. I gotta like them slow.
Not slow. It's slow. It's long. It's kind of it's obviously about Belfast. It's kind of Brahma. I don't know how to say Brahma. He was born in Belfast. It's kind of semi-autobiographical, and he wrote it, and he's the little kid in it, and it's outstanding. It's terrific.
But so you didn't bother to go to the theater to watch either the Bond finale or the
No.
Or Dune.
No.
Oh my
Well,
God.
let me just tell you this, okay? My Rotten Tomatoes, which I think, you know me, I live and die by the tomatoes. And when I got out of it, my wife didn't like it as much as me, nor my two grown children, like the girls.
Oh, I could have told you they probably wouldn't want to watch it in the movie theater.
Why?
I think they would have enjoyed other movies in a movie theater. But I think this movie's kind of like, oh, you can watch it at home. You don't need to go to a movie
Well,
theater.
I would agree with you there. That is true. That there's not as it's gone down. It was more tomatoes when I looked last.
What out
71.
of curiosity, what is the Rotten Tomatoes on Dune?
Okay, so Belfast is 91. Let's look at Dune. Dune with Timothy Chalamet. Chalamet, sorry.
He's
90. So mine was higher. And then the Bond, what's the Bond one called?
No Time to Die.
No Time to Die. I take it he dies because he lives with the title. I saw Ryan Reynolds. No Time to Die, 88. So all three quality movies. Mine still wins. I saw Ryan Reynolds say something about, I see you're looking for a new Bond. What about a Canadian who likes to sip gin and tonics?
Do you think he would make a good Bond? I don't think so.
No, he'd be a terrible Bond.
If you wanted to do like a funny spin-off of Bond.
Yeah, like if he just made jokes all the time, but no, he wouldn't be a good Bond. He's an awesome actor, and I love him.
Well, I would tell you there would be more girls watching Bond movie than ever before.
This is
I
true.
don't know. I'm not sure.
Ryan Reynolds? Yeah.
Oh yes, like he is like.
Is he going to take his top off? I'll definitely go see it.
Thank you. I was about to say, like, if they had him, they would change the demographic for Bond movies forever.
Maybe.
Well, I'm not saying they should.
I'm not saying it's gonna be
I'm just
good.
saying
He
that
could
this
be
is fact.
He's the funniest guy out there. Like if you had to name one actor to go drink beer with, who would it be? Ryan Reynolds.
Yeah, Reynolds is a good one.
Yeah, for sure.
Definitely.
He'd be so much fun. And like what I love his stories, and you hear like he grew up in Vancouver, and so when you start to hear his stories, you kind of feel like, oh, he's just like one of us. Like, you know what's funny? Before he got his job, I was listening to him on this podcast called Smartless, and he was literally working at Safeway in Vancouver, and at the night shift, just stocking shelves. There you go, ladies. You could have seen Ryan Reynolds stocking shelves, and he got fed up, and one day he quit, and he drove to LA. And the funniest part of this story is he drove to LA, and he was trying to get himself a job, and he went to this agent, and on the way out, Jason Bateman was leaving. And Jason Bateman's like, oh, if you need anyone and whatever. And Jason Bateman gave him his card and like helped him out.
Oh, get out.
Yeah. And it's kind of like, but Jason Bateman's older. And so Will Arnett is just making fun of Jason Bateman during this whole show about how he's trying to pick up Ryan Reynolds because he's like a 17-year-old. So he's like, let me get this straight. You see a good-looking 17-year-old at your agent's thing, you give him his card and you tell him to phone you?
Wait, so this is a podcast with Will Arnett, Jason Bateman, and Ryan Reynolds?
Well, Ryan Reynolds is the guest. It's also got the guy from Will and Grace.
Which one?
Not the main one, the other one.
Oh my gosh, what's his name? Sean something.
Yeah.
It's Sean something. I can't remember his last name now.
Yeah.
It's a pretty good podcast. They step all over each other, and sometimes it gets a little too much.
Sean Hayes, right?
Yeah.
That's his name, I think. Yeah.
And listen, they're movie stars, so they're a little full of themselves, but it's kind of funny to hear it from their perspective. I'm sure some people say that about us. Yeah, they're Bay Street guys. They're full of themselves. But these guys, I like it. And they'll interview people, and you'll hear stories. And yeah, so Ryan Reynolds came, and they'll listen. They'll start talking about. They're pretty open about, like, they'll make drug jokes, and it seems pretty well anything goes. But it is funny because they do lots of ads. So you're kind of funny because all of a sudden they're selling Casper mattresses, which I can't wait. We got to get a Casper mattress ad, so I can hear Patrick tell us how much he loves sleeping on his Casper mattress. Like, it's just,
I'm looking at this chart of Tesla, and all I'm thinking is about how comfortable that Casper mattress would be tonight.
Oh my god. There's our pitch right there.
You should. Jim Grant is the funniest guy because literally he's this very erudite, very serious guy, and he's talking about all the problems with the Federal Reserve. And then he'll say, you know what doesn't give me any problems? Is my Casper mattress. And he literally just works it in there. And it's just like, oh my God, it's awesome.
It's the most hilarious
Yeah,
thing.
it is pretty funny. So, anyways, so Ryan Reynolds was on Smartless, it's called.
Oh, I gotta have to go listen to it.
Yeah. You sound like you're a little bit, I think we found Lena's Achilles heel.
Well, no, it's kind of like Gosling or Reynolds. I'm always on Reynolds, right? Like,
I said pardon?
Ryan Gosling, Ryan Reynolds, it's always Reynolds.
I agree. Reynolds is technically better looking. He's also technically
Technically, this is like fact.
No,
right?
He's technically better looking. He's also
you know this to be
funnier.
fact.
He's also funnier, and he's the full package. But Ryan Gosling's pretty fucking cool. Like, I don't know.
Cool.
I was about to say.
I mean, I think his wife is really hot, or his ex.
Who's Ryan Gosling's wife?
Ava Mendes. Look her up.
Oh, okay. I don't know. Anyway,
she's beautiful.
Ryan Gosling's pretty cool. Like, he's I kind of like him. I don't know. There's something about him that just kind of he's cool. Anyways, the two Ryans, they're funny that they're both Canadian.
Yeah.
Is he from Vancouver too?
I don't know. I don't know where he's from, actually. I think he was just born here, but I think he.
No, he was a Mickey Mouse person, so he I think
he moved when he was really young or something, right?
Yeah. Let me just see. He's from London, Ontario.
Oh.
And let's see, he's born in 80, so he's 10 years. He's actually pretty old. Oh no, listen, he went to like high school here. He's full on Canadian. He's not one of these ones that left right away or whatever.
You know who else went to high school in Greater Toronto area? Do you know?
Will Arnett.
Oh, well, Will Arnett.
Will Arnett actually lives like when you hear him tell stories, he lived in my neighborhood.
I think he's hilarious.
He is pretty. He gets a little.
He's my favorite. He actually is my favorite.
So you gotta go listen to the podcast. After a while, it gets a little much, and you could see why he got kicked out of. Was it SAC or no? What's the one out west? The Appleby. He got kicked out of one of the boarding schools, and his dad was like some CEO of Molson or something, or Labatt's. His dad was a bigwig, a CEO. And he got sent to one of the boarding schools, and he got kicked out.
Oh my!
So
God.
I'm sure there's some great stories about him.
Oh, he's you know what? Like, I'll admit that if I was a girl, I would like Ryan Reynolds for his look, but Will Arnett is by far my favorite as a guy. Like he's so fucking funny. He is, and his type of comedy is just right up my alley. Absolutely my favorite.
I just love the magicians that demand to be taken seriously.
Oh,
he is good in that Arrested Development.
He's fantastic in it.
Yeah. And really, that was his break, right? Like, he was nobody
I think
till
so.
then.
I didn't really know about him until I watched that show.
And he's still nowhere near the rest of them because, like, he does Win Mobile commercials or whatever here, right? Like, I see him all the time.
Oh, he does? I have not watched a commercial in forever.
he did some sort of Lego show.
Oh, yeah, he was the Lego voice. That's right.
No, but he
Lego
also
show.
did actually.
Oh, my God, I saw a commercial. You're right. That was really embarrassing. Like, he needed the money. Like, it was like a game show about Lego. And you're just like, dude, you should have said no to that.
You got to pay for the coke habit somehow.
Yeah, he should have said no to that. He did get divorced, so maybe that was it.
Oh.
Yeah, he's got to make the alimony payments.
Oh,
Yeah.
my goodness.
But it's funny because they talk about they talk about some gym in LA. Equinox? Is there a gym called Equinox?
Yeah, I think
Yeah,
so.
yeah. And I guess that's where they all go and they all see each other. And then if you go to some, I don't know if it's a Santa Monica Equinox or whatever, so you hear these stories. And anyways, you should listen to it, Lena, if you like that stuff. Lego Masters, that's what he did.
I looked up Equinox. It says Equinox, fitness clubs, luxury gym, and workout clubs.
Yeah. Will Arnett is exactly my age. I didn't realize that. So I wasn't here when he was here because he was busy getting kicked out of his school already. But he is kind of a character.
Yep.
There you go.
Okay, well, anyways, everyone have a great weekend.
A great weekend, everyone. It was a great show. Lots of fun.
Lots of fun.
Have a great weekend. And
and actually, you know what?
With...
Our American friends, we will not see them before Thanksgiving. So
happy Thanksgiving.
Happy Thanksgiving. Enjoy it. I know all the Canadians. Every single broker in Canada hosts Thursday watch football day. All the institutional brokers, I've gotten a couple of invites already. And
so popular.
Just an excuse to drink beer or whatever. So I don't know if we're allowed, actually, now that I think about it. Are they allowed to do that?
What do you mean?
With the COVID?
Oh, I don't know. You can keep your mask on.
As long as you keep it in a private setting, I guess you can't really do it at a big bar, can you?
I don't know. Who knows?
Anyway, all right.
Happy Thanksgiving, everybody. And we'll see you next week.
Cheers, everyone. Cheers.
Bye-bye.